All right, all right, all right. We're here again this morning, ready to get started. We got a nice market ahead of us. I hope it's going to be a good day. Always have a hope for a good day. It's a beautiful sunrise. Watching the sun come up over the mountains today, this morning, and watching the markets get ready for this open. How are you guys this morning? Let's come in here and get things rolling. My name is Lan Turner, and looking forward to a nice day trading with you guys. Let's quickly look over the news, what we got happening on the news before the market opens. We're going to come in here and recent dates. Let's look at the impact. Let's just look at two. And today is Thursday. Jobless claims came out at 6:30 this morning. So that's kind of what moved the market this morning. 8 o'clock, we got Fed Harker speaking. He's not too interesting. They've not tagged him as red, so they don't think it's going to move the market much. But 8 o'clock is going to be something people are going to be waiting for. Anytime the Fed speaks, we got to be mindful of that. And then crude oil, we could watch crude oil today. That'd be kind of fun. And gasoline coming in at 9 o'clock, but that's not for another hour and a half. So we'll see if we're still around for then. And then at 1:30, we got Fed Williams speech. So Fed Bostic speech, Fed Bowman speech, Fed Barr speech. So today is a big day for the Fed. And usually before the Fed speaks, the market's kind of crappy. So we'll have to watch and see if there's not any opportunities to jump in. This is a big Fed day. Although they don't look like they're going to be announcing any interest rates changes or anything like that because they haven't tagged these guys as important today. If we come in here and say 3 for Thursday, we don't have any. It all goes out to Wednesday next week. So impact's pretty slim, but we'll keep that in mind. All right, so there's the bell. Does it just go off? No, not yet. I see the NASDAQ getting excited. I think the bell rang. We still got a couple minutes before the bell rings. What is it? At 7:28 and 24 seconds. So 24 seconds left in this bell, in this bar. So we got a couple minutes left. So we'll get things rolling here. See who's, if you're in with me and you want to say hi, go ahead and say hi. Chat something in our live chat. It's nice to have somebody say hi in here. We get a lot of people. We've been getting a few people watching the recordings of these, getting a few people coming into the class. It's nice. I just started doing this last week, and so starting to get a little group of followers come and watch us and attend and be a part of the show. So it's fun. Follow along, watch these markets. We're watching the S&P. Let's get this screen a little bit bigger for you so you can see what's going on. We're watching the S&P up in the left-hand corner. We've got the Dow in the upper right-hand corner. Is that the bell? No, there's still a little excitement pre-bell. We got one more minute, 21 seconds. So got 17 seconds to the bell. They're getting a little excited. The market's starting to run. Maybe we'll get some excitement today. Yesterday was pretty quiet. Day before was pretty quiet. It's been a pretty quiet week. I had some good afternoon session, 9 o'clock, 10 o'clock time frames. I like to watch the top of the hour, and those have been pretty good. Of course, we watched the opening bell here. Here we go. We got getting pretty excited. Okay, that's the open right there. Now, we're in the futures market, so let's go ahead and I'll switch this over so you can see what we're doing here in the futures market. We're trading the futures market out of Chicago. This is not out of New York. This is the Chicago market, and it trades 23 hours a day, so it's been trading all night long. And the S&P 500's up in the left-hand corner. The Dow's up in the upper right-hand corner. The Dow's taking off like a rocket ship while the NASDAQ is falling in the bottom right corner. And then we got the Russell in the bottom left corner. Look at that Dow go. Holy cow. The Dow's taking off like a rocket ship, but look at the NASDAQ. Now remember, these four indexes generally travel the same. They kind of go in the same little movement waveforms. And so we kind of like to see that convergence of those four markets and then just kind of trade the lagger as one's a little bit slower to take off. When they go in different directions, that's not good. We don't want to see that. We don't want to see them going in different directions. So the NASDAQ is falling while the Dow is rallying. That's not a good sign. So we need to just kind of hold our horses. We don't want to trade this wild and crazy open. And this is the wild and crazy open out of New York, because again, this is out of Chicago, and these things have been trading all night long in Chicago. And that's why when you wake up in New York and you go to the markets, and you're like, hey, how come there's a big gap from yesterday to today? Who's been trading? What happened? Who traded that market? Well, it's these guys over here. It's us over here in the futures market, because we can trade this market all night long. So other countries can trade it. You can trade it all night long too. If you want to trade the S&P 500 in the middle of the night, you can do that over here in the futures market. Can't do it in the stock market. Out of New York, they don't let you do that, but you can do that in the futures market. So we like the futures market. It's got a lot of advantages you can trade over here in the futures market that you can't have over in the stock market. We've got no pattern day trading rules over here. So if you want to trade over here, you don't have to open your account with $25,000. And if you have less than $25,000 in the stock market, you can only make 4 day trades a week, or they close your account down for 90 days. That's a little ridiculous. We don't have that in Chicago. Different exchange. We don't have those silly rules. So come on over to Chicago and enjoy a much cleaner market. Now, of course, you can't trade individual stocks over here. We can trade the indexes, but we can trade other things. We got all kinds of fun things we can trade over here in the futures market. We can trade gold and silver and copper, and we can trade platinum and palladium. We can trade the indexes, as you can see here. We can also trade corn, wheat, soybeans. We can trade the traditional commodities. Got all kinds of fun things to trade over here. So cattle, you want to trade some live cattle? We can trade live cattle over here. So we have a good time over here in the futures market, where we don't have nearly the restrictions on us that we have over there in the stock market. So there's none of that stuff where you have to have easy to trade or easy to borrow and all that kind of stuff. We don't have to borrow, pay interest, pay dividends if you're short on a market over here. We don't do that. It's not how it works. So a little bit more to learn over here just to see how it works, but mostly it's just because it simplifies everything. But there's a little bit more to learn over here. If you want to learn a little bit more, come and hang out with me, and we'll learn a little bit more about the futures market. And you can see how to trade over here with a small account. You can trade with a small account. You can open an account up with as little as $5,000, or if you're going to trade the micros, you can even open up your account with as little as $2,500, and you can trade all day long if you want. They don't stop you. There's no restrictions on a small account. So we'd like to do a little small account challenge here and just see what we can do. We're going to just kind of follow and watch these markets. The first thing I like to do in the morning is just kind of watch this morning craziness. I don't want to jump in real quick right now. I want to wait for it to go up. Usually in the morning, it kind of swings high, swings low, comes back, and then it kind of decides what it wants to do. So then you can get a normal trend. Right now, it's just all this wild, crazy choppiness as everybody's jumping in and out and scalping the morning bell. And it's a little bit too crazy for me. So I like to watch it. I like to be here and look at it and watch it. And you guys can come and watch it with me. And we'll wait for it to settle down. We'll draw a few lines on the screen and determine where the boundaries are. And then we'll look for it to break those boundaries. Watch for the market to get bullish or bearish. And then we'll try and take some continuation formations. Just try and keep it real simple. This is a learning channel, so you can ask questions. I'm here to teach. I'm not here to be a braggadocious, show you how great I am. This is a learning class. I've been teaching trading for 30 years. And so if you guys want to come along and ask me questions, that's why I'm doing this, just so you can ask questions. Now I'm using a software program called Track and Trade. This is my preferred program, of course, because I intricately involved in the design work on it. I own the company. I guess I should say that, but nonetheless, this is a great piece of software designed specifically for active traders in the futures market. We do have a stock version. Look at this market go up. It's taken off like a rocket. So that's good. Maybe we'll have some opportunities to trade some long trends here. We'll give it a minute to go up and wait for it to flush down and see how far it flushes before it turns and starts to rally once again. The NASDAQ flushed right out of the gate, and now it's starting to come back. It's rallying a little bit, so we'll wait and see. But look at the Russell. The Russell's got topping tails and bottoming tails all over the place. We're using Heikin-Ashi bars, so these are Heikin-Ashi candlesticks. A little bit different view, a little bit different mathematical model that runs these. They kind of look a little different than the normal traditional bars. Here, I'll turn off the Heiken Ashies for fun, and you can see this is what a normal chart looks like. And that's what that's what most people are looking at out there who are trading right now. And the market's just kind of choppy all over the place. If you put on the Heiken Ashi bars, it kind of smooths that out for you, shows you what the trend is, makes it a little easier to see. And then we use those flat bottom bars to indicate an uptrend, flat top bars to indicate a downtrend. And if they've got lots of topping and bottoming tails, it's no trend. It's an indecision bar. So that's kind of what we're looking at here. And watching, we'll just continue to watch this for a minute and see if it doesn't settle down a little bit. We need the market to settle down. We don't want to jump into this wild and crazy fray. There's some lines in here from yesterday. I'm going to delete all the lines. And we'll just kind of wait and see where it settles out at. We can look at a longer term chart, but right now I just want to look at the 1 minutes because this is one we're going to be trading on. This is the high. This is kind of the boundary high right in here for the NASDAQ. And then this is this pre-market session. Then this is the market low right now. So we got kind of this channel right here that this market's kind of moving through. Now this one here is coming up. It's created a high right here. So we'll have to wait and see what that run is. That was a big run right there. That was a $775 run. The S&P is still up there. It's not pulled back yet. So watch, we're seeing the Dow pull back. So now watch, we'll probably watch the S&P pull back. The Russell's fallen. It's not even climbing. Now remember, the Russell is the small caps. The S&P 500, that's the 500 larger markets, the 500 biggest, I don't want to call them the biggest markets, biggest stocks, but generally, for the most part, they're the biggest of the best stocks, 500 stocks of the stock market. And then you've got the NASDAQ, which is the top 100 of the NASDAQ exchange, primarily technology firms. But the technology firms that are in the NASDAQ also cross over into the Dow and into the S&P. So you have a lot of crossover there. So here we see the NASDAQ is starting to fall. Dow's starting to fall. Let's draw a couple lines in here on the Dow. This is kind of the low points down in here. We'll just keep those in mind. The Dow is sitting here playing around with the VWAP. The other markets are just ignoring the VWAP. Why do we use the VWAP? Because other people use the VWAP. Really, it's the only reason. Not really. Everybody, talks about, oh, you got to have the VWAP. VWAP's the most important thing in the world. But then when you look at the four markets that are all basically reflections of each other, some have the VWAP, on them, some don't. Some the VWAP's way up here, someone's way down there, and they still move basically in the same trends, and they basically stop at the same price levels and move at the same levels, even though the VWAP's there. One of them might hit the VWAP. If you draw enough lines on your chart, then then when the market touches it, you can say your system worked. That's what the VWAP is. The VWAP is a system that works because other people like it, and that it's a line that's on the chart. So when the market touches that line, they can say, "See, I'm trading the VWAP," and then see how it worked. But then you look over at another chart that's almost the same thing, Dow and S&P, and there's no VWAP in sight, and it still stopped at the same spot. Wait a second, why did the market stop on the S&P where there's no, but you said it was because of the VWAP on the Dow? That doesn't make no sense. So you have to pay attention to it because other people do. So there's probably a bunch of people here on the trading the S&P who see the VWAP up there and they think the market's going to go to the VWAP. So they drive it up to the VWAP. Now this is an opportunity to take another long position out of here. If we wanted to be an ABC aggressive trader to the upside, you'd see this thing come back. We take the first, as long as it stays above that, starts to rally and starts to go back up. Now it gave us a false signal on that little topping tail right there and then came back down. This is a buy signal here off this little red bar. So you had the 5-bar rally, the red bar pull back, and the rally up, and it should go up and touch that VWAP because that's what people want to make it do, right? So it's not the market that does that. It's us traders that make it do that, and large institutional traders. And if they watch the VWAP, then they'll see that too and think that the retail traders think that's important. So here we are coming back down on the Dow. We're going to use that VWAP right there. See the VWAP? We're going to hit that VWAP and use it as support. We'll see if it comes down and touches it. Now it's breaking through the average true range. To me, the average true range is more important than the VWAP. But the average true range is that yellow those yellow dots. Anytime it crosses the average true range, it'll throw a signal and say, hey, the market's bullish based on the average true range of the market, or it's bearish based on the average true range of the market. So if we're bullish because of the average true range of the market, then we want to only be looking for long positions. If the market changes and suddenly we're now bearish based on the average true range, we only want to be looking for short positions. Now you can look for reversals, which is fine, but chasing reversals is oftentimes a difficult strategy. So I like to trade once the market has proven that it wants to be in a trend. So for example, here the NASDAQ is starting to prove it wants to be bullish. Okay, so it's a bullish market. We've got the crossover of the average true range. The market's starting to rally. I want to see, 3, 4, 5 good bars saying that it's a bullish market. And then I want to see a couple little red bars. And I don't want to see a big reversal trend. I just want to see a couple red bars down and then break those red bars. The first green bar to go again, that's our ABC pattern, and that's our signal. That's what we want to take. We could have taken this one here, but that was only one bar. I like to see 2 bars. And this one here went 1, 2, 3, 4, 5 bars. That's a little too much, but it's good. We'll go ahead and why not? Well, that looks like a good setup. We're a little late on that one. Oh, I had the wrong chart. Look at that. I can't believe it. I can't believe I just did that. Okay, we're going to kill that one. I wanted to be in the Dow, and I missed it. I had the wrong chart selected. When you're trading 4 charts, you're looking at one. It's the chart that's selected. See how this one has the blue border around it? That's the one I was trying to get into, and I actually had this one selected. And so when I was looking at the one on the upper right-hand corner, I hit the buy to get in on the break of that red bar, and it got me into the NASDAQ because that's the bar that chart was highlighted. So when you're trading 4 charts, you got to be mindful of which one's selected, because that's the one the order is going to go in on. If I wanted to be a little bit more cautious, I could just go like this. But if I just do this, you guys can see it better, and that's probably good for you guys to be able to see it better. But the problem is then I'm blind. I don't know what the other charts are doing. I don't know what the other markets are doing. I want to see the other markets because they all kind of travel together and they're all signals of each other. So look, the NASDAQ is starting to fail a little bit. So the Dow is probably going to drift a little bit here. It's going to hold back. Now the S&P went up. It's playing around with that NASDAQ or with the VWAP right now. So it could go up, bounce off that VWAP and turn and fall. This could be our reversal right in here. You're like, well, why would the S&P reverse there and nothing else reverse there when they all kind of reverse at the same time when there's no VWAP on the NASDAQ? Well, that's the fallacy of the VWAP. Shh, don't tell people that. Shh. Just let them believe it has something to do with it. All right. So here we go. The Russell is just kind of falling out of bed, but look at all the topping and bottoming tails on the Russell. See, we could have been long right here on the Dow, and I screwed up. I screwed up that one. I didn't want to chase it because, you get in a little bit late, get in too high, and then the market comes down, stops you out. So I guess what we'll do is we'll just wait and see if we can't get another opportunity. I feel bad that I screwed that up. Got to be mindful of which chart is selected when we're trading, which one we want to put an order on. Okay, the S&P is still dancing around that VWAP. Can't decide whether it wants to break above it and continue higher or if it wants to pull back. I'd like to see it pull back a couple of little bars, not break that ATR, and then give us an opportunity to take that one long again, but it may just flush here. So if we got a top, put our boundaries in here for the S&P, get a little S&P boundary going. That was a nice move though, from the opening bell up to that VWAP. That was $575 on the S&P per contract. Now remember, if we come over here to the key tab, in the key tab you can see that you're like, well, how much money was that as an investment? Well, for day margin, our day margin is sitting right around, it says $750, probably around $1,000 for the day margin. So you put up $1,000 to make that $500. That's what that's talking about. Look at the Russell. Holy cow, it's dragging things down. So that right there looks like a reversal on the the Dow. We'll watch and see if it breaks the ATR. If it breaks the ATR, we'll look for it to come back down and, well, at least test the VWAP. But look, the NASDAQ is pushing bullish right now. And it's got lots of bottoming tails and topping tails. I don't want to trade a market that's got lots of bottoming tails and topping tails. Those need to be more decisive bars. Those are indecision right there. When it does that, those are indicative of indecision in the market. And the NASDAQ is usually kind of our bellwether. It's kind of our canary in the coal mine. If that thing's indecisive, the other markets are going to be a little indecisive too. Although the Russell being a little bit more decisive in there, isn't he? Little old Russell down here. So if we draw a couple of trend lines, you can see in the downtrend, we got the downtrend. We got a little flag formation here. We got another little kind of ugly one there, but a little 3-bar flag there is a little better. So let's kill this one. The only reason I draw that one in there is because it's got a higher low and a lower high. But then we had this clearing bar that cleared out both the upper and the lower of that inside bar. Give us this little pattern right here. It's a little called a flag. So when a market does that and you're in the process of watching the market go through, we call that flagging. So the market is flagging, meaning that it's getting a little hesitation in the trend. So since this is a downtrend, you'd look for it to flag and then continue the downtrend. And that's exactly what that one did. This one I wouldn't really, yeah, you can almost call it a little flag. I call it more of a shelf. It's a little flag in there. And then it's starting to drop. We're testing that average true range right now. It broke it enough that bar closed below the average true range, and so it says we're in a downtrend again. But now it's starting to pull back. It's going to be indecisive here too, and can't decide whether it wants to go back up. So volume is holding steady. So we're getting a buy signal, a possible buy signal right here on the S&P. I'm going to take this one with a cautious entry on a break above. Oh, there it goes. Okay, I just wanted the first candle to break a new high, and that's what that was right there. Now it needs to decisively move in my favor. If it doesn't, I just get back out. Like right now, it's like, why are you not decisively moving in my favor, you nincompoop market? So that took us down 50 bucks. I wanted it to break that red bar and turn and start to rally, and it didn't do it. So for me, I just get back out. We'll wait for the 15-second bar and see what it does again and see if it wants to break and go up one more time. That's what I'm looking for. This market's showing so much bullish strength. The Russell's starting to reverse. I want to see this thing go back up. We might put another one back in and try again. We got 1 second. We can try again up here on the S&P and see if it doesn't want to go now. We got one on the Dow. The Dow is going bullish. We could go long on the Dow again, which might be a better move for us. It's not real fond of what's happening over there on the neither one of them are playing happy with us, are they? Our NASDAQ is starting to fall, and it's dragging the S&P and the Dow down. I wanted to see those things reflect and go back up, start the uptrend. We're in. You see the arrow though. We got the arrow indicating that we went bearish on the market. But I was gonna think maybe we would get a flip on that and it would go the other direction, but it's not flipping. Getting highs and lows. We're getting topping tails and bottoming tails. That's indecision. Boy, the market just suddenly cooled off, didn't it? If it breaks that high, that previous bar over here on the Dow, we'll look for it to go up one more time, see if it won't make that A, B, C reflection off of this triangle wedge formation that's coming out of here. So you can see right now so we're long on the Dow, but we got this kind of a little wedge pattern happening here. See that little triangle formation? Oh, now we're long the Dow, and now the S&P is the one that takes off. How about that? Murphy's Law never seems to. There we go. Now we're getting a little movement. Now we're down 55 bucks. It's not very much, $55. We can pick that up pretty quick. Usually what I like to do is I like to just recover my losses and then start with a new fresh trend. But where it's only $55, we might let this thing go. Of course, if it reverses on us, we could reverse and expect it to drop out the bottom of the channel. We could put a reversal order in there. This market's being stupid too. It's not going. It needs to decisively move. Go, decisively move in our favor, or else we're just going to get out and sit and watch again. Decisively go. Come on, get off the pot. Buy, 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 people, buy, buy, buy. What a worthless market. We may have to reverse our position and take the short. Or it may just be going dead and we'll get stuck in the sideways market and end up chopping ourselves to death and have to wait for start going into recovery mode. Yep, sure enough. That's a sad state of affairs. All right, so go into recovery mode. I don't want to dig myself in a big hole, just trying to get a position. The market just doesn't want to move. It's stuck in the mud. All right, so we got our recovery back, so we're not down in the red anymore. I like to do that. A lot of traders will tell you not to do that because this market might now continue to fall and make a whole bunch of money had we stayed in. But I'm not that kind of trader. I'm very conservative, and so I'm teaching conservative strategies. So what I want to do is I want to recover my loss. I was getting down too much. I was down $100. Took a couple of tries to get into the market. They both failed, and we ended up down $100. So I got my $100 back. For me, I like to do that. We're only into this market 20 minutes. I don't want to be down $100 20 minutes into the market, so I could get my money back. Now we can start over. I got another 8 hours I got another 5 hours to trade if I wanted to sit here and wait for another opportunity to come along. I would rather dig myself out of the hole with the opportunity to get out. So now I'm back to green, and now I can wait for another setup. That's just my way to do it. I'm not telling you how to trade. I'm just telling you how I like to trade. I'm just showing you how I trade. If you want to kind of adopt some of the things I do, great, good for you. If not, go do your own thing. But, I'm just teaching you from my experience of what I like to do. And what I like to do is recover my losses. If I can recover my losses, then I don't feel so anxious and so nervous about, oh, I'm down $100. And now if I try again to get in and might put me down another $100, then I'd be in 200 and then 300, and then you don't want to trade. So I like to just recover my losses on the first opportunity to recover and then wait for another setup. If this market continues to fall and drop, no big deal. Lots of trading opportunities, lots of signals. It just makes me feel better to do it that way. I don't feel so anxious. And when I get anxious, then I start doing stupid stuff, making big mistakes. So I like to recover. And you'll notice that when I did that, my recovery order was a reversal order +1. So I actually went in with 2, so the market didn't have to move very far to recover. And so that's what I like to do. Just recover that quick, take a little bit bigger extra sized position. Sometimes I'll do that twice. I'll try to recover to the short side with 2, and then nope, failed, recover to the short side with 3, and then the market just doesn't have to move very far. Keep squeezing down how far the market has to go to get my recovery back. And then once I get my recovery back, I can go back to normal, start trading again. That's why I start with 1, because I might have to reverse 2, 3, 4 times to if I get stuck in a trend where I'm trying to recover. I go into what I call recovery mode. Speaking of recovery mode, I'm writing an article in Pit News Magazine. If you don't have a copy of Pit News Magazine, if you're not a subscriber, go over to pitnews.com. In fact, use my code here before you run off. use my code to subscribe to Pitt News Magazine. I'm writing an article for Pitt News Magazine about how to do that exact thing, that strategy. I'm going to publish that strategy of how to reverse for how I do it, how, my strategy for reversing for recovery, and why I believe recovery is important, an important strategy. Um, Even though you might miss a longer trade, getting the recovery for getting your money back is, in my opinion, a good idea. Now, this is a perfect example where if I'd have just stayed in and trailed down, we'd be up a lot more money, right? But that doesn't always happen. In fact, more often than not, you barely make your recovery and it turns and goes back. You get your recovery and you're happy. Sometimes you miss a big trend because you get out too soon, but you recovered your losses. And I'm writing an article about that in Pitt News Magazine. It's going to be published in the October issue. We just published the September issue. The September issue is awesome. I have a great article in the September issue. Doc Brown has an article in the September issue about how you want to gauge your Social Security retirement. If you're getting close to Social Security age, you're starting to worry about that a little bit. He has a great article in there in the September issue, so you can go subscribe. You can get it for $1 for a whole year subscription. And it's an amazing little magazine. Most of the articles all have audio. So it's an audio, video, and visual. You can read the articles, you can listen to the articles, you can watch videos on the articles. It's a full multimedia magazine, all on trading. Pretty amazing. It's a neat little magazine. A whole year subscription is only $39. $39 for a whole year of all this audio and video and reading articles all about trading strategies. So it's a really good magazine. I'd recommend it. You can get it for $1 for a whole year, your whole first year subscription for $1 if you use my code LandLive-$pound or $1. So go get a copy of Pitt News Magazine. And I'm writing an article on this I think it comes out in the October issue. My article on this comes out in the October issue on this this strategy that I've just been talking about. Okay, we got a little bit of a pullback in there. The market's flagging. I'd like to see it pull back a little bit. These bars on the Dow are pretty weak. It's a pretty weak downtrend. Looks a lot better on the S&P. That's the one we should have been trading over on the S&P. But you can see the pattern. I want to show you the pattern. This is the pattern I'm looking for. This is my entry. Okay, this is my favorite strategy, and it's about the only thing I like to trade especially when I'm trying to demonstrate, because I'm trying to teach you the very best strategies so that you have some success right out of the gate when you start to trade. There's lots of ways to trade. I mean, there's lots of setups, there's lots of triggers, lots of ways to get in, but this is my favorite. It's the ABC pattern. So you see the market creates a high, comes down, in this case, downtrend, 2-bar rally back up, and then that's your flag, and then the ABC, and we're going to try to catch the C to D, always the C to D. Okay, so this is A up here. This low point here is B. This pullback is C. And then we want to get in on the first candle to break a new low after that C, which would be that first red candle, flat top red candle. And down that thing goes, and you want to ride it all the way down. Now, this is a Fibonacci projection, which went to 130.9, which is, that's our Fibonacci golden ratio to the downside, right? To the extension side. So Fibonacci extensions, you have Fibonacci retracements, 61.8. You're all familiar with 61.8 on a Fibonacci retracement. Well, did you know we have a Fibonacci extension that's also a golden ratio, and that's 130.9. So we expect the market to break that 100% and go to 130.9. Doesn't always do it. Sometimes stops at 100%. That's okay. 100% is the same distance from A to B as it is from C to D, or from C to 100. All right. So that's the move we're looking for. And then the reflection is what we call it. So the reflection is what we want to trade. We don't know that the market's in an uptrend until it proves to us it's in an uptrend. It needs to have 3-4 good uptrend bars. It needs to have broken the ATR, the average true range. Need to have an arrow pointing up saying we're in an uptrend. We changed the direction of the market. We need that 2 little bar pullback just to give us that A, B, C pattern. And then we break and go to C to D, and that's where we make our money. All right. So that's why you don't ever see me jumping in on these first reversals. You're like, Lan, look, the Dow, it turned green. Get in, get in, get in. And you can look back in history and you can see where a lot of times that worked, where it's just like, hey, the market turned from red to green using these Heikin-Ashi bars. That's a great signal. Let's get in. Let's go. Or you could say, hey, look, at every time I get an arrow on the ATR, man, that thing really great. I'm going to just take the arrows. I'm just going to wait for the arrows. Then I'm going to get in, take the arrows. That works. That works great too. But when you use a combination of all those things combined, it even makes it that much better. So I wait and use the combination. I want to see the arrow to show that we're long. I want to see the proof that we're in the uptrend. I want to see the first pullback. So we get the A, B. I want to get the C, and then the first candle to make a new high. If it breaks a new high, that's my signal for entry to take that C to D leg. So it's a combination of all those combined, not just one or the other. I want to have all three of those in my favor before I take a position. And if I do that, it puts the odds in my favor that much more closely. I don't have as many trades. I'm not jumping in and out of the market as often, but I also don't have as many losses. So my winners are higher probability, so I prefer to do it that way. And again, I'm just telling you how I trade. You don't have to do what I do. Lots of different ways to skin the same cat. So in this case right here, we could get an ABC reflection to the downside again. So this could be another ABC. So we go A, B, C, and anticipate a next drive down, right? And that would be an Elliott wave, and we could count that off as an Elliott wave drive, and that would be a short position right there. That would be a sell signal. So if we wanted to take a sell signal right there off of that S&P to go short, that would be our short. So this would be drive 1, drive 2, and we'd be going for drive 3. So this would be drive 1, that would be the break, and then this would be the break for drive 2, and we'd be going for drive 3. So if I bring in the Elliott wave tool in here, this would be X, 1, 2, 3, 4, and we look for that fifth wave down, and that would be the bottom of the Elliott wave. Where's it going to go? Nobody knows. A, B, C, and then a backup D. That would be a traditional, typical Elliott wave pattern. And so that would be the one that we would want to be taking to take the short side. So we're doing the same thing over here on the Dow. And the reason I'm not taking it, you're saying, well, why aren't you taking it then if you're telling us that's what you're supposed to do? Well, because it's weak. The market doesn't show a lot of strength in here to the downside. It's being real kind of a little indecisive. Now that one is a little, the S&P is not too bad. And then here we are down here on the NASDAQ. The NASDAQ dropped out of that little pullback beautifully, didn't it? So that's what we would expect on the NASDAQ. We're coming down, testing some previous highs here. So the Dow, and the S&P is a lot better. That's a little bit more decisive. We could have gotten into that one on the break, and we'd be feeling a little bit better about things. Look at the Russell, just it kicked it off, did give us that little pattern right there. So we got the 4 bars, 1, 2, 3, 4, actually got 5. We got the green bar back, first red bar to make a new low, and down that thing cascaded right out of the bottom. That would have been a good place to get in right there, and down we go. So it's those little pullbacks that we're looking for in the trend. Each one of these little pullbacks right here, if I can grab the right tool, each one of these little pullbacks right here, each one of those little green bars, see that? In the trend, that's where you want to get into the market. So here's another one right there. Get into the market right there. Get in short right here. Now we got the little flip-flop right here. That one, we can't. That one broke. All right. Because that said we're going to go long. It actually broke above the average true range. Now I've got the average true range pretty aggressive. I've got it just set to 1. It's just an average true range of 1. And if it breaks above it, that's telling us, hey, the market's bullish, but this wasn't bullish. So it just says, well, the market's actually weak then. So we're getting the little choppy flip-flops on the Dow. The NASDAQ would have been a good position. We could have actually taken that one and been up making some good money on that one. Up, clean this one up. We'll continue to watch and see if we can't pay a little bit closer attention. I'm talking and not watching the markets as closely and missing out on some opportunities. That Russell was the opportunity today, wasn't it? The Russell's been actually pretty good the last couple of weeks. It's been the one where we're like, well, we should have been trading the Russell. Here we are over here trying to trade the Dow. The Dow is usually the one I kind of default to. I kind of like the Dow, the S&P a little bit, the Russell third, and then the NASDAQ. When I'm trading the minis, the NASDAQ is usually the one I just watch as an indicator. It's a big market. It can rip your wheels off real quick. And it has a lot of indecision going, and those indecisive bars can take you fast. into the red. So you have to be careful with that one. The Dow moves a little slower. The S&P a little slower. The Russell's a smaller market, so it takes a bigger move to make the same amount of money. Whereas the NASDAQ's a bigger market, takes a smaller move to make a lot of money. But it goes both directions. It can also rip your wheels off just as fast. Now look at how they're starting to finally sync up. You can look and say, okay, now they're traveling the same. We got a lot of convergence. See how we've got the same pattern here. We got the same pattern here. We got the same pattern here. That's what we want to see. Now we're not getting that. We got a little pattern right in here, but not quite the same on the Russell, is it? But look at those three. The S&P, the Dow, and the NASDAQ are all doing about the same thing. Now we're syncing up. Now we're doing what we want to see. And so now we can watch these, and we'll watch these patterns. And when one will start to move faster, we can trade the lagger, trade the last one, because they're all going to travel kind of the same. Look at that green bar. They're all three got a little green bar. They all failed the little green bar. No, we still got a green bar on the Dow. No, it just failed. It went red. So you can see, and it went back and broke the previous high. So had we got in up there and trailed the one bar back, we'd have got stopped out. See, that's why I said it was weak. The market was weak. The Dow's weak. Wasn't anxious to jump in there because that was a weak market. It's not giving us a strong trend. So here's a nice trend line coming down here, and it's the 1, 2, and now we should go with 3. So this should break out and start to rally. This is what I'm going to predict this market's going to do. I think we're going to see this thing go up and start to rally higher. It's bouncing off the VWAP, so people who trade the Dow see that, and they're like, oh, that's important. People who are looking at the S&P and not looking at any of the other markets are like, oh, well, we're below the VWAP, so we're going to go back up to the VWAP. The guys who are watching the Dow, oh, we're bouncing off the VWAP. Go watch the other channels of guys watching the S&P, and that's what he's going to be saying. Oh, we're going to go back to the VWAP. Go watch the guy who's doing the Dow. Oh, we're bouncing off the VWAP. It's important to those people. It's a very important line. Okay, we're breaking to the upside again. Now remember, oh, look, we're failing. We're failing. Weak market. 10 after 8. Didn't we have some news? Let me pull up our news. What was our news? 8 o'clock. Fed Harker speaking at 8 o'clock. So they don't really have anything predicted for him other than people are just like, what's he going to say? What's he going to say? So not really saying anything of any value, it looks like. Okay, we're getting another little pull up on the S&P. The question is, you're like, okay, is that going to be another trail to the downside? So how would you trade that? You're like, well, it could be a reversal and go back up, or it could be another leg to the downside. It could come up, make the little pullback, and start to fall once again, and we could take that short side. Markets come down, it's matched that low in here from the previous, so it come down, it roll along that low, go up, and it could come down and break it and test it one more time to the downside. The way you test that is you just drop a stop in there. Don't go in with a market order, you put a stop in. So this is where I have a trailing stop. Same thing here. And if it goes up and breaks and closes above the ATR, which it's done, well, then you clear that off and you say, okay, we're trying to go bullish now. So if we're going to go bullish, then we want to see 4 nice bars. Then we want to see the little pullback that doesn't break the ATR. Then we want to see the first candle break a new high, and we'll start to go long. So this is what we're looking at now. Because it's got the only reason we think we're going to go long now is because we got the up arrow, right? So we went from the down arrow, now we're at the up arrow. So the up arrow is telling us this market wants to go long. So we need an opportunity to get in once it proves bullishness. Now we've got our first signal that our first 2 signals that shows bullishness. The first signal is green bars. We got green bottom flat bars. That's the first thing we look for. Second thing we look for is for it to cross above the ATR. It did. It crossed above the ATR. We got 4 bars. That's good. We want at least 4 bars. 3 bars oftentimes is probably just a reversal in the downtrend. So if we're looking for it to rally and go up, we need 4 good bars. Here's the 4th bar. Now this should be the high bar. See, it's coming up here and it's testing this previous high. And then we want to see a couple of little red bars, little pullbacks. We want those bars to be small. We don't want those to be big, long red bars. We want them to be small red bars. We're getting the same pattern down here on the NASDAQ. Now look, the Dow is the lagger. So if we wanted to trade the Dow, because it's going to follow the S&P and the NASDAQ, we could get in on the Dow as the lagger. Okay, and it's going to now go and it's going to follow the NASDAQ. Now the NASDAQ and the S&P, they're giving us more than 4 bars. We're getting 5 bars, 6 bars here. 1, 2, 3, 4, 5 nice big bars. So it's going without us. So we could trade the Dow now. We could jump in and say, okay, well, the Dow is going to probably follow and it's going to trail up with those guys. The Russell down here is doing its own thing. It's starting to rally too. I want to see a little 2-bar pullback. It's proven that it's bullish. Okay, it wants to be bullish. Okay, S&P, we believe you. We know you're going to be bullish. Okay, NASDAQ, we believe you. We know you're going to be bullish. Give us a couple little pullbacks, 2 little red bars, so that we can then take the next leg up. We want the A, B, C, D, right? So that's what we're going to look for on a prediction. There's 1, 2, 3. We'll get a couple little red bars, then we can take the next leg up. And if it doesn't happen, we just wait for it to do it again. It'll eventually do 1 or 2 and we'll get our $500 and we'll be done for the day. And whether it happens right now or whether it happens, you know, at the top of the hour at 9 o'clock or 10 o'clock, top of the hour at 10 o'clock. Remember, the top of the hour is always a good time to reset yourself, start trading again. Lots of people reset at the top of the hour, especially the big companies. They'll come in and they'll start trading at the top of the hour. So here we are coming into the top of the hour at 8 o'clock. So we're 10 minutes past the 8 o'clock. We're starting to get a rally out of here on the top of the hour at 8 o'clock. I'm surprised the Dow isn't doing better. This is really surprising me that we're not getting a bigger push up on the Dow. In fact, we're falling on the Dow. So that might be an indication here. We're getting the pullback on the S&P and on the NASDAQ. I'd like to see this little flag formation come in, come down, create my 2 little red bars on the S&P. Don't break the average true range. I don't want it to break the average true range and give me a down arrow, because then I have to throw the whole up arrow idea out. But that NASDAQ went too far too fast. That just turned right around and took off. And you're like, well, you should just trade the red to greens. Well, you could do that, but that, you know, then you would have got whacked on that red to green. You would have got whacked on that red to green. You'd have got whacked on that red to green, but this red to green would have worked. But you'd have got in and then got whacked on that pullback bar right there. So okay, now on the S&P, we're getting 1 red bar back. So this is our flag. So it's flagging. That's what we call that, right? The market is flagging. So it's coming, it's pulling back, stopping everybody out who's trailing up off of that first green bar. So getting all stopped out right now. Now I want it to stay down there. I don't want it to go down and touch that yellow. I don't want it to break through and close below the average true range, which is that yellow dot. I want it to turn and start to rally once again. But we got 2 seconds, 1 second. Let's get a new bar. There we go. Okay, on the S&P, we can put our order in to go long if it breaks above the new bar. And I don't want to go in with 3. We're going to go cautious here. Okay, so now we're trailing, but look at the Dow. The Dow's just cascading down. It never did give us that. Look at the ugly green bars that the Dow gave us versus the beautiful green bars on the NASDAQ and the S&P. That's kind of showing a wimpy market to the upside, which can show weakness to the downside or to the upside for the S&P and the NASDAQ. That's weakness. And we may just get this thing to turn and dog down, back down again with another dog leg. You see, we don't just jump in because we're like happy to go long. Although you can, if it comes down and touches the yellow dots in this situation, a lot of guys will buy right there because that's, you know, it's pulling back and it's down and you're going to anticipate the rally anyway. So get in when the market's pulling back, not when it's rallying, and you can get a little bit better feel. But that's an advanced strategy. You have to be kind of ballsy to do that, because if you get in, you just buy on that yellow dot. Like right now, hit the buy button. Well, what if it just continues to cascade down? Well, then you take a loss. But you also, if it turns and starts to go up, you got a really good fill, right? That's the excellent fill. Let's bring this a little full screen. We're watching, this is one we're watching. I'll bring it full screen so you can see it a little bit better. So we're looking for this market to go long right now. We don't want it to close below the yellow dots. Now again, an advanced strategy would have been to hit the buy button right on that yellow dot when it touched that yellow dot. And if we would have, we'd have been up right now in anticipation of the rally. The more conservative trader is going to hold until it breaks and makes the first candle to break a new high, because we're red bottom, red top, flat bottom topping tails. This market could just make one great big long downtrend, and if we bought on those yellow bars, that would put us, going long on a downtrend. So that's why I wait for the reversal here, because we've already got a confirmation that the market wants to be bullish. We're getting a little flag. I want it to now confirm the next leg up. First candle to break a new high, and away we go. And then we need it to be decisive. If it breaks that candle and doesn't decisively start to go bullish, we just get back out, take another loss, go into recovery mode, try to recover the loss in the next trade, and do it all over again. So we want to see a nice big reflection up right here. This is what we're looking for. We want to see this market go 1, A, B, C, break that bar and rally up, and it'd be nice to see it go up past, break the VWAP, and go to 130.9, which would be the golden ratio to the upside. But it's being weak. This is not good. We generally only want to see two bars pull back, and then the rally. This looks like to me it's going to come down and be weak, and there we're in. But if it doesn't decisively continue in this direction, we're just going to get out. Now we could reverse and say, well, maybe it'll be a 2-bar this direction and fall again. So if you wanted to play that reversal, you could come in here and you could drop in a reversal order, and you put that right underneath the action bar. How far are you going to let that thing come back against you? It's not decisively moving in our favor. So that's a weak bar. It should have stayed up there. It should have broke it and continued to go. And where it's not, it's like, you piece of crap. Oh, hit the wrong button again. I can't believe I just did that. I had my order in the wrong spot. So when I clicked the button, it put me in the wrong direction with my reversal. So now that put me down $172. So that bar broke and it failed. And so I was going to take the reversal on the failure, because oftentimes our best signal is a failed signal. So if it fails to the upside, it'll probably turn and go to the downside. But of course, it could also chop and then just chop you and go failure, 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 failure. And you go through a choppy market and you get chopped up. But if the market will trend, it can take you the other direction, and that's where you can hit your recovery. But I screwed that one up too. Two mistakes today. I made 2 mistakes today, and both of them cost me money. So now look at this again, the way this is sitting here. And now it's pointing, the arrow is pointing down, so now we're going bearish again. So now it broke below the average true range. So that signal failed. That was a complete failure. And then I was a complete failure because I screwed up the reversal. I should have been short right here, taking this reversal, and I'm not, because I screwed up again. So that was the long side failure. So in the failure, we take the reversal short side and look for it to now continue to fall. But that's what I screwed up. All right. Leave a comment, guys. Go down there and leave a comment for me in the message section down underneath the video. Leave a comment. I appreciate you talking to me over here. So B Taylor saying, how do you get 4 windows? Up here in the upper right hand corner, you see 3 little icons: the little line icon, the box icon, and then the X icon. If you hover over the central one, that's called Cascade, and that's the one that makes the chart go full screen and then down into the small screen. Now you got to have multiple charts open, so I've got each chart open, and it'll let you hover over it and tell you which side, how you want them to look. If we want them to look like this, or if we want them to look like this, or if we want them to look in the quad, or if you want to bring one full screen. It's just that little icon up there in the upper right hand corner. Oh, now look, now our market's starting to rally on us. So it failed to the upside, failed to the downside. Now it's going back up to the upside. Just lots of failures. This is just a choppy, bad market right now. So I'm going to sit out for a second. And B. Taylor, you're welcome. I love coming and doing this. So glad to have you. Glad you can make it in the mornings with me. It's good to have you. Go down and say hi in the comments too, down in the comments under the video, because then that's where YouTube will look at those, and those are more important than our little chat conversations here. They don't really care much about the chats. They care if you leave a comment down in the comments section. Make sure you subscribe and ring the bell, so that the little bell ringing will tell you when I'm coming live. I don't come live every day. I try to do at least 3 or 4 times a week, but if you don't hit the little bell, you won't know when I'm coming live. So hit the little bell so it'll send you a notification, and then you'll know when I'm coming live, and we can work together. I'd like to get more people in the class. That's the goal, right? Fill the classroom up, get lots of people in here trading with us. It's a lot more fun when we have more people. So if you help me get more people in here by putting a little comment down in the comment, that'll that'll tell YouTube to show our class to more people, and then more people can come and join us. Here we go. Look at this little pullback right here. There's a little pullback. So if we'd have been paying attention and trading over here, we could have taken this one. This is a little cleaner on the NASDAQ. Then it never did break the yellow dots, whereas the S&P did. So the S&P threw us out of whack on this one because it came back too far, broke the ATR. So now we got to go into recovery mode. I got to look for an opportunity to get our money back. If you go and subscribe to Pit News Magazine right now, we've got Solving the 5 Pitfalls of Covered Calls, How to Trade for Income. So if you go and subscribe to Pit News Magazine for $1 for a whole year, you get this book on Solving the 5 Pitfalls of Covered Calls, How to Trade for Income. You get that for free as a free gift. That's a great little book. I wrote it, and I spent a lot of time on that. Did a lot of research into that little book and a lot of study. A lot of examples. I think you'll really enjoy it. And that comes free with your subscription to Pit News Magazine for $1 for a whole year. So back to the markets. So now this is failing to the upside. We're just losing all of our momentum, and all of our opportunities are coming by us. Choppy markets, not going anywhere. We got one little boost, one little rally out of there, and then a lot of sideways trending here. We thought we were going to go rally here, and failure. Now we're failing here. We're going to come down. It looks like we're going to close below on the NASDAQ, we're going to close below the ATR. Look at that. Look at the Russell. We should have just been trading the Russell today. I don't know why the heck we weren't just focusing on the Russell. That's been the baby. That's been the good market for the last couple of days, or the last couple of weeks. It's been the best market to trade. And I haven't traded it hardly at all. I've been focusing over here on the Dow, which has been one of the crappiest markets. But look to the downside. Oh, look, we weren't paying attention, and we got our signal right here. 2 green bars on the ABC reflection. Where was I? What was I doing? I was talking about Pit News Magazine. This thing came up here, gave us the little signal for the 2 bars back, and now it's starting to drop. We're getting some little movement out of here now. So this is the CD. I wasn't paying attention. Let one go by. Trading's like fishing. You gotta throw your line in there and see if you can't catch a fish. And that was our fishing hole right there. Hook, line, and sinker, and we've missed it. We'll see if it pays off, or if it's a failure anyway, if it comes down. Sometimes you miss it like that, and you're like, oh, crap, I missed it. what in the heck was I doing? I was looking over here, I was doing that, or I was paying attention. I missed my setup and I'm missing it. Now the market's running without me. And then it turns and comes up and you would have got stopped out with a loss anyway. And you're like, see how smart I am? I didn't take that trade. We'll see how smart we were. We didn't take that trade. Boy, we're not getting anything. Been into this down 172 bucks at the end of our first hour. And that's because I made a mistake. I accidentally hit the wrong damn button. I wouldn't be down if I wouldn't have done that. I hit the right button. I just placed it wrong on the screen. That's why when I teach my classes, I tell people drop your orders above so the software can place it for you. Don't keep trying to place it yourself. Let the software place it. And I was trying to place it myself. I should have just dropped it, let the software place it. Because the software, I've got it programmed in those buttons. Those QOCO buttons, you can program them so they do what you want. And you just click them and drop them, and the software takes over and trades for you. And I should have done that, and I didn't. I was trying to place it myself, being a little bit more conservative. Should have just let the software place it, and then I wouldn't have had that error, and I wouldn't be down 172 bucks. Oh well, that's all right. We started this account with 25,000, and we're at 29.7 now. So $172 isn't going to hurt us, and we'll get it back. We'll probably go back and start looking. This market's just dead right now, not doing anything. I'll come back. I'm going to call it for us right now. Now I'm going to come back at 9 o'clock myself and see if I can't recover the 172 and maybe boost this account a little bit. But this first hour's not been very good for us. Hasn't been good for us today. I do have a lesson for you. Don't leave without having our lesson. I always have a lesson. So this is the trader's state of mind. How come that didn't come up? There we go. Trader's state of mind. Don't be stubborn. This causes big losses. Could end your trading career. Admit you're wrong. Get out of the trade. Okay, the whole idea is don't be stubborn. Don't think that you're always right, because the market's the one that's always right. You're always the one that's reactive to the market. So if you get into a market and it starts to lose money, get out. There's no shame in getting out. That's the good thing to do. Admit you're wrong and get out of the trade. There's no reason, just excuses. And then be accountable and learn from others. So we have to admit that, others have experiences that we don't have, and maybe they can teach us something. So listen to other people. Don't be stubborn. That's what causes big losses. So the biggest lesson there is if you're wrong, get out. And if the market's trending flat and sideways like it is right now, admit that it's not going to make you any money. You got it down 172 bucks, go away, come back in an hour. We'll come back at 9 o'clock and see if the market's not moving a little bit. I like to start at top of the hours because that's where we generally get a little bit of action. And it's a Thursday, and I probably won't do one live tomorrow. So our next live will probably be on the backside or back on Monday. So we'll be back on Monday. We'll take Fridays off for live trading, and we'll see you on Monday. I'm going to let you go.